Welcome back, and new at 6 tonight. According to a new survey, many Americans say their debt is unmanageable. Credit card use, a major reason why so many are swimming in debt. To help keep your head above water, anchor Tricia Keene spoke with an expert on how to tackle that debt.
I have quite a few.
Cherie Cornelius of Centennial Hill says she's had a collection of credit cards since she was 18. She admits she's gotten herself in some serious debt.
I have learned over the years that they are not meant for swiping any and everywhere.
Cherie says she's learned her lesson after years of just making the minimum payment. But many Americans are still drowning in debt. A survey by OpLoan says half of Americans are in debt. 52% of those in debt say their debt is not manageable. So we went to an expert at the nonprofit Money Management International for a game plan on paying off your debt. Number one, know how much you earn and spend each month.
Most of the clients that we work with have never created any sort of a household budget. They may not know what their credit score is. They may not have pulled their credit report in years. So it really is important to sort of take control.
Number two, call your credit lenders and see if it's possible to lower your interest rates.
It's a good idea to contact all those creditors and see if they are willing to adjust those rates. And if you have a financial hardship, make sure you present your case and see if you can get those interest rates down.
Number three, try paying off the lowest balance first. Once it's paid off, you can put extra money into paying off the next lowest balance.
Unfortunately, here in Las Vegas, a lot of people, when they're in debt, sometimes use these payday loan places. What would you say about that?
Payday loans are so tough. You know, one study they did with Pew Charitable Trust a few years ago found that the average person doesn't just take out one, they actually take out multiple over and over again. And that cycle of payday lending is really detrimental because the interest rate is so high.
That report from Pew Charitable Trust found on average, a borrower takes out 8 loans of $375 each year and spends $520 on interest.
So it's really important to avoid those if at all possible.
With a plan, some financial discipline and time, you can get yourself out of debt. But if you decide you need a professional, beware of who you turn to for help.
If a company guarantees they can improve your credit, especially in a short amount of time, that's a red flag. If a company says they can settle your debts for pennies on the dollar, that's another red flag.
As for Cherie, she says she's come a long way in figuring it out on her own.
I have learned to pay down as much as I can. So I have been able to pay off quite a few of them. I'm working towards getting a zero balance on everything.
For 13 Action News, I'm Tricia Keene.
And we have more information about getting out of debt with Money Management International on our website. Just go to ktnv.com/debt help.